Hello, Tina Mitchell here, your local mortgage experts with Mortgage Minutes. I thought it was an appropriate time to send a video because it is crazy out there, obviously with the coronavirus, but also with what's happening with mortgage interest rates. So I wanted to share the reason why and what's happening. So we hit another historical low in interest rates. Interest rates got down lower than even during the financial meltdown, depending on qualifying factors and discount points or not that you decided to pay. You could have gotten an interest rate all the way down to 3%, maybe even 2.875% on a 30-year fix. Now we've seen interest rates go up over 1% in just a few days. Now, still very low interest rates, but it's perception, right? If you see an interest rate at one rate and then there's such a drastic increase in such a short period of time. Well, here's the reason why. There's a couple reasons, but it's attached to liquidity with the banks. So banks are only required to hold reserves of 10% of your deposits. So from any money that you put into the bank, they have to hold on to 10% of that. Well, consumers are coming in now to their local bank to pull money out. And for many reasons, but maybe you're purchasing a home and your down payment, your original strategy was to sell some stocks. Well, with the volatility in the stock market, you probably are changing your strategy and you're deciding to pull from your savings, money that you have at the bank. Maybe you have a margin call that you're going to the bank to get your money out for that, or taxes are due for annual taxes or quarterly taxes. So many different reasons and why you might be pulling money out of the bank. Well, in a normal scenario, if one bank has liquidity issues, they will just borrow from another bank. And that's where the feds have just lowered the fed's fund rate, which is a direct impact to the prime rate, not to mortgage rates. Mortgage rates are based on how the Fannie Mae 30-year bond. Yes, they follow the 10-year treasurer, but they're directly tied to the Fannie Mae 30-year bond. The federal funds rate is the cost for banks to borrow from each other overnight. But if all banks are running into liquidity issues, and I'm going to share the other reason why, then they can't borrow from them. Now, the feds did come in and they did put some funds in for the liquidity issue that's coming up. So they're trying to step ahead of this, but this is what is going on. It's kind of like the old movie, It's a Wonderful Life. Well, okay, it's not as extreme as that because we have a lot more resources today, but it's similar. Now, here's the other issue that's coming in with the issue with liquidity for banks. Banks can only lend 10% of their deposit. So if you deposit $1, they can lend $10, lending on loans for mortgages and other things. Well, when everybody was refinancing because the interest rates hit a historical low, they're running out of liquidity, of the ability to be able to lend money. Now, here's the other issue that's coming up as well, is when you lock in a loan 30 days ago, you're locking in and the bank is hedging that loan. Now, in a normal market, they win and they lose. They gain and they lose depending on what the secondary is doing and where rates are at the time that you close your loan 30 days ago. Well, being that we've seen such a drastic increase in just a few days, banks are losing billions because of the hedging. So that's another issue that is coming in. Now, you can look at different bank interest rates and see a huge difference between one and another. The reason is because they're increasing their interest rates so high that nobody's going to want to refinance when they're with them because they're concerned about the liquidity. Now, there are actually some banks out there that are not taking any new application for refinances at all. They've just stopped lending on refinances because of the liquidity issue. Now, this video is not a shout out for Highlands, which is the mortgage company that myself and my team work with, but we're a correspondent lender. So if you are having issues and you're finding that your bank is not allowing you to refinance, is not accepting new applications for refinance, as long as some bank out there is lending, as a correspondent lender, we work with multiple lenders, so we can assist and help you out there. So on a positive note here, it is a great time to get out there and look at properties, because right before this happened, if you have been in the market, you know exactly what's happened. We're back to an issue with enough properties, too many buyers and not enough sellers, and multiple offers, 10 offers, 15 offers on one property, waiving finance contingencies, paying more than the property may appraise at value. So we're back in that arena. Well, if there's a lot of buyers that may not be out there on the market because of what's happening with the coronavirus, it might be a good time for you to get out there. Interest rates are a lot higher, but they're still very low. It's just a perception. When you see an interest rate at one rate and it's gone up so much, it makes it seem as if rates are high, which they're not. We're still very low interest rates on a 30-year fixed rate mortgage. On another positive note, we've been through and made it through worse times than we are right now. We made it through the financial meltdown. If you're watching this video today, you're still here. And so just know that we're going to make it through this as well. And those of you that know me personally know that I believe the bigger the challenge, the bigger the opportunity. And I actually learned that in the financial meltdown. If not for the financial meltdown, the mindset that I have today would not be here. So that in itself is a huge benefit from that traumatic time that we all had to go through in the financial meltdown. So I know there will be opportunities in this market as well. I do believe that the markets are going to recover. I believe that interest rates are going to go back down, but even if they didn't, they're really low right now. We've got a strong support system and foundation to make it through anything that's going to come up. And now it's just a time to come from a place of appreciation, love, and support for your families, your neighbors, and your community. This is Tina Mitchell with today's Mortgage Minutes. Thank you for listening and have an inspiring day.